You're listening to RIAcast, a podcast of the Southwest Florida Real Estate Investment Association. RIAcast brings together a variety of real estate entrepreneurs from all over the world to share tips and ideas. The core purpose of the Southwest Florida RIA is to help members become more profitable and successful through networking, education, and empowerment. Here are your hosts, Jeff Tamarello and Michael Lyons.
So what kind of yields can you expect in self-storage, and what kind of yields do you actually get in self-storage?
So difficult question, because yield is really based on what you pay, right? So I would say if you want to talk market cap rates, that's probably the easiest way to look at it. Those which a cap rate, for most of you probably already know this, but a cap rate is an unleveraged return. The meaning of if you didn't have a mortgage on it, what would your cash on cash return be? And historically, it's been high single digits into even sometimes around the 10 cap range. But over the last number of years, that return has reduced, and came down, where investors are they're buying them to get a return, 5%, 6%, and it's obviously going to depend on the asset, the location, how it's performing. There's people that'll buy stabilized properties at 5 and 6 cap rate. Similar in the apartment world. We were just joking around about it. I got an email today on a 4.65% cap rate apartment building in California, and pro forma was 5.5%. And that seemed, and it actually said that was the highest cap rate. Now keep in mind that's apartments, but you're seeing that even in the self-storage world, because there's high demand for the property type, and so they're paying aggressive prices. Now, to make it a little bit more personalized, what do we look for? We're looking to be we're looking for an internal rate of return or an annualized return, which is similar, in the high teens or higher. So ideally, we want to be in the 20 plus range to our partners. So, from a cash flow standpoint, you should be, if you're buying it right, you should be in a double digit cash on cash return from cash flow alone once it's stabilized.
Yeah, cap rates are cool, but cash on cash is really what matters.
It is.